Good afternoon, everyone. JR with Secure Metals. Monday, May 12, 2020, p.m. Eastern Standard Time. And I got a quick technical look here at the metals market. This is going to be a quick video. I just want to visit some of these pivot points. So here it is. This is your daily chart here for gold. Okay, we'll zoom in a bit. And we can see here that we were in a falling wedge. Broke out of that wedge, but it never really finished the wedge. It should have came down here to roughly around 1260. It never did. It actually ended up trading off this triangle that we have here. Okay, so we have the triangle here and here, and there's your triangle. So we broke out of that range. So we do have a target of at least 1225. We reached 1215 and came back down. And now we're testing this uptrend line. Now we didn't have this uptrend line here up until the April 24th, where we had that fake breakdown. I'm sorry, and now we're moving up higher. So this is your trend line. So we tested this trend line back in April 24th. We retested it back in May 2nd, and we retested it again last night. 1281 was the low, or 1280 was the low, and now we're moving a little bit higher. So we're up about 20 bucks from yesterday's low. Currently trading at 1298. Stochastics are still fairly neutral. They were coming down, and now it looks like they're starting to rise again. But again, still fairly neutral because we're not 100% sure if this is going to go up or down. Now we also have your 20-day moving average moving sideways. So everything's really flat. So I do expect a little bit more sideways consolidation here. Maybe we'll test the 1350 zone here within the next couple of days again. But again, it does look like we are trading in a flat range as of now, right? So this would be your range. We might go a little bit higher, but this looks like to be the range. And again, we just have to see how this is going to play out. But again, your 20-day and 50-day moving average, that's where we currently are on the weekly chart. So again, fairly flat. We want to see if we're going to continue to go higher, or if this is going to, or if these 20-day moving average and the 50-day will push us down. Only time will tell. Your silver chart, okay. This is your weekly chart here. So we've been testing this $19 level here for quite some time. Stochastics are starting to move up a little bit higher. We did get a nice bullish candle here. But again, still fairly flat. Your 20-day moving average, you can see that it's still very flat. It's still pointing to 3 o'clock, so still range bound here, right? So this would be the range for silver. I would say between $22 and $19. That's your range. We want to get above these 20-day and 50-day moving average so we can possibly test the higher moving average, right? The 100-day moving average. Your daily chart. So this is the zone that I drew here quite some time ago, and every time we touch this zone, we see a nice spike. Test the first April 24th, another test back in May 1st and May 2nd, and another test here within the last few days. And again, every time we touch this zone here, let me extend the zone a bit more. So every time we test this zone here, we seem to be finding buyers. Now again, the more we test the zone, the less likely the zone will hold. But again, we just really have to wait and see. Your stochastics are a bit confused, looking to go higher, and we have a little bit of pressure from this 20-day moving average here, which is pointing to roughly around 4 o'clock. Not too not too bearish, but not too positive either, obviously, right? But not positive. We'd like to see this 20-day moving average begin to curve. Now, another thing that I'd like to point out also is that we are finding some support in this long-term trend line here, right? So this trend line coming from, I mean, we're talking about pretty far away, coming from August of 2007. This seems to be the trend line that we're currently testing. So this might be the trend line that we are testing. As we can see here, we tested this line here back in December 31st of 2013, and currently we've tested it three times since April 24th. So again, we don't want to continue to test that line. And take a look at this 20-day moving average. This 20-day moving average has also been tested quite a few times. So again, the more we test this line, the more likely it is for us to break it. We did have a very nice bullish candle here, engulfing candle. We'd have that engulfing candle here. Now remember what I said here. When we see these in bullish candles, we look to buy in the middle, right? So we buy here roughly around 1925. You put a stop loss in roughly around here, around 1850. You can make some money if you've been buying at these zones. I wouldn't necessarily do these short-term trades. We've already accumulated here enough. At this point, I just want to see if this level is going to hold, and this is what we need to overcome here on this daily chart. Is this? Let me clean this up a little bit. Right, so this is what we need to surpass. We really need to overcome this line here. Okay, I think once we can overcome this 2050 line here, we'll be in much better shape. If I'm looking at the weekly chart here, this will be the line that I would like to overcome, roughly right here. So you have one here, and then you might have another one over here, right? So currently we're testing this line at 1950. But this is the one we want to get above, because if we get above this line, then we'll have this line as support. Let me make this bigger. So we'll have this line here as support, roughly around 2050. Actually down here, so that would be around 2020. So I'd like to see this metal move above 2020. If we can go above, maybe test a $21, come back, test the zone, and go higher. That should be hopefully the beginning of a nice bull market. But at this point, we just want to wait and see. But in the same respects, anytime, if you haven't bought silver just yet, or if you're looking to average your cost on silver, this is where you want to buy. You want to buy in the zone below 1920 is really the zone. And every time we see this zone test, every time we see a test of the zone, we see a nice spike to the upside, like we did last night. So stochastics are moving higher, but again, fairly neutral. And we're still trying to get above these moving averages and so on. Keep in mind that I did point out that on the 50-day moving average on gold has surpassed the 200-day moving average, not silver but gold. On the daily chart, you can see this 50-day blue line crossing this black line here. This was back in May 14th. That's very positive. And at this point, we just want to see if it's going to hold. But that's very bullish, and I'm hoping that because of that death cross, we're going to see higher prices. At least test the high 1300s here pretty soon. I definitely expect it before the year's up. But we'll see what happens, right? Breaking through new highs today. And I think I had this line, let me see, was it on the 4-hour chart maybe? Well, I thought I had it up here, but at any rate, this is your support level. I'm sorry, your resistance zone. And I drew this up a couple days ago. I did mention that you can take a short here. I think that this is where I make the made the call. So this is where you found some sellers. Really a good opportunity. Again, like I said, when you touch these zones, you have to get in. If you got in this zone, you made some money. Again, your risk was about let's say 16,560, and your high was 16,630. So that's about an 80 point risk. And if you took that position, you went 80 points right here. That's your first 80 points. Now you move your stop loss to break even. From here, you go another 80 points. You move your stop loss back to the second target. So now you have a 2-to-1 target. And again, this ended up falling about 3. So if you took this trade, you got a 3-to-1 and you got stopped at 2-to-1. So you made money there. If you came in here again, you made money again and you got stopped out at again at 2-to-1. If you took it here, you finally got stopped out. Okay. But I like these. I wouldn't buy the Dow Jones here at this point, but I wouldn't necessarily short it. I mean, yeah, I think technically you can. I think it's fair to say that we will see $15,000 prices again on the Dow Jones. We just want to see how high this is going to go. But like I said, no stimulus. I do not expect this Dow Jones to continue to create new multi-highs. You have your Bollinger Bands beginning to expand here, so that's might be the start of another little bull rally here. And it might hit 17, it might hit 17 and a half. I don't see that it'll have enough legs to get to 18,000. This is the Australian dollar versus the New Zealand dollar. Okay, and this is the zone. And I said back here that anytime you touch this zone, you can buy. If you bought here, you made money here because again, your risk was a 2-1. There's your risk. So you bought here at 15. I'm sorry, at 1.057, right? Your stop loss would have been at about roughly around 150. There's your 150. There's your second 150 right here. You almost get to 350, so you would have gotten stopped out at 2-to-1. You came back again. You bought again. There's your risk. Again, you 2-to-1. So every time you come in here, you're making a bet, and you're again looking for at least 2-to-1. So if you keep buying in these zones, you really have to lose 7 times to break even, because again, they usually will give you a minimum of 2-to-1. But I think this one will continue to go higher. I think this will easily come up here. So again, if you bought here, you made 5, 6, 7, or 1 here. If you did the Dow Jones, you did the same, where again you made a few times 2 to 3 to 1 per trade. That's the only way to trade, is the best way to trade, I think. And again, you have that silver chart testing this zone here, looking really nice. But again, it's tested this zone here numerous times, so I wouldn't necessarily keep chasing it. Right? That's about it, guys. Thanks for watching. We'll see you next time. Bye-bye.